Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber.
Tuesday, December 27th, 4:16 p.m. New York time. Recap today's day trade for SPX 0 DTE. SPX is the S&P 500 index, and 0 DTE is an option contract that expires the same day because it says 0 DTE. So this was a day trade I took. Let's go for the top down. Look at the daily chart. This is the daily chart. Closed red. Yep, it made a higher high than the prior close and a higher low. Closed red inside the body of the prior candle. It's in this consolidation phase. Let's extend this out. Here we go. Consolidation phase, consolidation phase, consolidation phase. I placed this trade at 10:03 a.m. Collected $55 credit. It went against me. I closed it at 10:18 for $120 per contract. So that's a loss. Shame on me. That stinks. Thank goodness I stuck to my money management and I closed it ASAP. Wanted to close it at 110, but the market moves really fast against me, so still got out of it. But I gave up a few $10 more per contract. I took the trade bearish. Yes, I said bearish. So we're looking here on the left at the 15-minute chart, the middle of the 30-minute, and I mentioned on the far right the daily. Let's do this without those two. Let's look at the 30 and the 15. So this is today's session, and this was today's session. I waited till the first 15-minute candle got done. Huge red candle. Yep, huge body. Small wick on the top, small wick on the bottom. Leaning bearish bias at that point because we didn't take out that high of the prior trading day. See that blue horizontal line? That was the high, and this blue horizontal line was the low of the prior trading day. That first 15-minute candle did not take it out. It sold off. Watch the second 15-minute candle forming. And as I was watching that, I was watching this 30-minute candle and the process of getting done. So that second 15-minute candle started. It broke below, not off the bat, but eventually broke below the low of that first 15-minute candle, proceeding lower. I was not in the trade yet, sat on my hands, waiting for that to complete because I was thinking, yep, this may be a fake out. So as this was getting done, we had that long wick on the bottom there, but the body was up above that. So I'm starting to see this long wick on the bottom there. So I queued in a bullish position on my option chain. Yep, that would be the bull put spreads. And it was I got the delta. Might have been like around a 15 or 16 delta, my short strike. So I was thinking I'm going to go long when we hopefully during that third candle would go take out the high of that first. Again, I was waiting for the high of the second red candle to be broken during this third candle. Well, when this third candle started, it was trading inside candle. That's yellow candle, inside candle. And this red candle But when it got done, this second 15-minute candle got done, this 30-minute candle making up 2 red candles of the 15-minute, huge red body, small wick at the top, small wick at the bottom. So I was leaning more bullish, thinking we're going to reverse and maybe test halfway above that. Well, when this was, again, inside candle at the yellow candle beginning, nope, it did not take out that high at the beginning. It went lower. And I was thinking, okay, still, I'll keep that queued up, that bull put spread. And then a few seconds later, it went down, broke below that low. Broke below that. I was like, okay, it's selling off fast. Let me get in real quick. Well, I had to cancel my position I had set up. It wasn't working yet, but it was loaded up on the bullish position. Because again, I want to trade bullish. I was thinking break, but it didn't. So I was just queuing up that position. Wanted to make sure I'd collect at least $50 on that 0 DTE spread. And as it was moving further lower, I had to adjust it once. And adjusting it delayed me getting in it. Because again, what I had queued in, when I was starting it, it wasn't $50 yet. And when it was, it moved real quick to like 40. So I had to move the strikes down. Again, it was moving fast. So in hindsight, what I should have done is just passed on the trade because it was moving fast. Again, that lower strike, let's look here, moving against me. So again, if I got in sooner, this short strike would have been higher up. But again, it was moving lower faster. So I'd adjust this short strike to get a fill I wanted, at least 50. Then when I got filled, short time later, this 15-minute candle went higher, took out that high. Yep. Closed. And then this green candle was not done yet. No, it was not even, it wasn't even a quarter way up. It was way down here. Yeah, way down here. So it's out of my hand, watch. And then as soon as it got done, the next candle, this 4th green candle, immediately had fast price action, starts going up. Not good, not good. So when it went up, again, my plan was to sell 2x. If I'm wrong, get out 2x, meaning collect the 55, so it goes double that, I'm going to get out of it. Even though it may never test that, that's a hope and a dream because we don't know what that's going to be. I'll be getting out 110. Well, this candle shot up real fast. And when I was trying to close it at 110, it was already at 115. And I toggled it again to reload. Got out at 1018 for 120. So again, I lost $10 more than I even wanted to. Yep. And then it tested. Not till later on. Yep. Not till this red candle came. It tested this daily high that prior time. It tested it twice too. Well, at the end of the day, it never tested that short strike. So if I'd stayed in it, I would have made max profit. If I didn't stay in, if I stayed in it and went and tested it and went higher above it, well, that spread, each credit spread there was $500 margin. I'm not going to stay in that to risk all that. No, that's why, again, my money management was to close, double the price, get in. So a few things here. A, in hindsight, the best thing would have been done at the beginning was not taking that trade because it moved against me too fast before I got in it. And again, the original thing I had queued up there as a bullish trade. And I'll say again, the reason I got in it was because I got a reverse went bearish because we broke below that. So in hindsight, if I sat on my hands and if we never broke this low here and went straight up and broke that high, yes, I would have been a bullish position. My short strike would have been somewhere down here, somewhere further down here, maybe below that around. Yep. In hindsight, easy to say, yeah, it would have never been tested. But I didn't take it. Yeah. But I stuck to my guns and closed my trade when it went against me. So again, I didn't risk losing that whole $500 margin for each spread. Let's say, looking at now, darn, yeah. So if you look here on the 30-minute, this is interesting. The 30-minute, the first one, red, the second one, green, but made a lower high, lower low. So that momentum was still continuing down. And then the next candles, smaller trading ranges, higher wicks on the top. We want to call higher tills. Yeah. Yep. Well, I could have reloaded again. Went short, but that wasn't the plan. No, because it was later in the morning session. These short strikes, the premium's not paying much. And typically, as time decays, these short strikes are, if I was going to get the same delta, maybe closer there. So there's a certain window, time frame window. I'm looking to do these trades between the 9:30 a.m. open and before 10:30. So if this event occurred after 10:30, I would have already shut down and not taken it. Oh, there's a lot to say here. A lot of things occurred. But the point is, regardless if I'm trading the options on the SPX or ES, stuck to my guns and got out of it. And the best thing I learned here was, again, I'm going to need to add some more notes or condition myself not to get in it when it moves fast and I missed the entry where I wanted. But again, I did good getting out of it. I got out of it when this reverse came, but trying to get filled fast will get the price for moving fast. I'd adjust them. That's part of the risk, part of the riskness. Okay, many thanks for watching. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.